Hello and welcome to another update video about Solana. Wow, the Solana chart continues to be just in this boring sideways range. However, we've seen the bounce that I mentioned in the last video. Obviously, we didn't know where exactly it's going to unfold, but even in the white count, which is this Elliott wave triangle that we're following, I explained in yesterday's video that at some point now in the very near future, at least a B wave bounce should occur. So we have a little bit more structure to work with. Obviously, it's all lacking decent structure. Okay, so it could really literally go up from here and would then form this higher B wave that we already had on the chart. But for me, the downside pressure remains high, very, very specifically against one key level. And that's the $159.40, $159.50 level. You know, it's not like you don't have to be accurate there to the cent because the markets are way too dynamic and volatile for that. But sort of in this area, the $159 neighborhood, it's an important Fibonacci resistance level. Okay, and it is not only that, it's also previous structural resistance. So we had several touches there at this level. And here, most recently on the 7th of May, the price reacted. And before that, around the 23rd of April, 24th of April, so several times throughout the course of 2 or 3 days. So that's going to be an important barrier the price would need to get above to suggest that we can look at higher prices as per the extended B wave scenario, which would simply probably take the price higher in a larger B wave. Okay, so we have here the potential for an A, B, C structure, and the C wave would then be a 5-wave move. But we would need to see, I mean, even in this scenario, we have to sort of, to get confirmation, we have to wait for the breakout, right? In this current range, I think we might get some interesting, let's say, reward to risk opportunities as we're heading closer to that lower boundary line. Doesn't mean we have to, but it means if we get there, there's a good chance for a rebound, given that we're moving in a nicely defined range where we have a few touch points up there, a few touch points down there. You know, it's not perfectly defined, this range, but this $119 level seems critical. We had also here previous swing lows. Then we had a previous swing low in March and then a previous swing high, which confirmed that relevance of that level here in February, middle of February. So $119 seems to be a key level, and therefore I defined that as a range. Of course, we can break out of the range, but a breakout is needed to then really indicate which direction it's going, right? So you can obviously trade the range and everything, but it's not trending at the moment. Okay, so there's nothing really groundbreakingly new happening here on this chart. I'm looking specifically at 3 scenarios on this chart, but 2 are very similar. So it's basically just 2 scenarios. And in each of them at the moment, it's pointing towards the downside eventually in a larger wave 4. Of course, that could change, but as long as we see only corrective price action, I'm following here the likely scenario of an unfolding B wave. But because B waves are chameleon-like structures, they can take different shapes and forms, obviously. Okay, so we have one scenario in which this B wave is an Elliott wave triangle. You have that on the chart in which we have an A wave down, okay? So from this high point in March, A wave down, and then this would be a B wave triangle as an A, B, C, D, E structure. And then from there, we could look at a move to the downside. That's possible, but it takes another DE, and we could be working on that D wave, and that's this AB structure, which is moving in the D wave. Okay, a D wave in a triangle is a 3-wave move, so it would take one more lower low here below the Thursday low. So that's a triangle. Then the B wave could be a triangle, and as long as we're in the range, it's likely going to form a triangle. If we break to the downside from here, then the B wave already topped on the 7th of May. As I said, this is basically the same scenario, just a bit more accelerated downside pressure. And the only, let's say, the only reasonable bullish scenario I have at the moment, and that could change, but at the moment I only have the extended B wave, which could still lead to prices above 220, 230 in an overshooting B wave. But I need a sustained break above 159.50 for that. Yeah. So overall, we have to remain patient. Ultimately, it's important at the moment to just watch for this level up there and see what it's doing. If this really is wave B in white, we should see a move down, and then the C wave of wave D in white would be confirmed with a break below $140 and should target sort of somewhere around the $119 range, maybe a little higher. But for now, not really much is going on here. So don't want to be too repetitive, so we keep it short. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.